Well, back here, the latest GDP figures show the New Zealand economy grew 1.1% in the September quarter. The rebound follows a fall in June. So what are we to make of the latest data? Economist Brad Olsen is here. Hey, Brad, thanks for being with us this morning. A bit of economic Christmas cheer after a lot of gloomy forecasts. Is this quite significant in your opinion?
Well, look, it certainly starts us on a better track. I think we've got to be realistic. It's not an immediate and sort of overwhelming bounce back in the economy in terms of the recovery really rolling on. We know that economic activity, yes, was up 1.1% in the September quarter. That follows a 1% drop, though, in the June quarter. So we're sort of more back to where we were towards the start of this year. Not a bad place to be. We've filled in some of the hole, but we certainly haven't got the economic motor fully running. Underneath the surface, though, I think that's where you see, again, a few more signs of better or improvements for 2026. The likes of durable spending, so longer term stuff on electronics and similar, that picked up for households. So there does look like there's a little bit more momentum beneath the surface, but we're certainly not wanting to overplay it just yet. Yeah,
I mean, the BNZ has said we need to remain sceptical, and it's, quote, more noise than signal. Is that fair in your opinion, or is that, overstating it?
I think we do have to remain sceptical. I mean, let's be clear that the GDP figures have been bouncing around a lot the last couple of quarters. They've been big ups, big downs, big ups again. So there is a lot of volatility. And if there's one call for next year, I really hope that we have not only better economic times, but sort of more reliable, stable economic times. Having a bit more confidence in what's going to happen in the economy is important for businesses when it comes to, investment decisions, hiring decisions, and getting jobs back. But I don't know if I'd say it's more sort of noise than signal, because looking at some of the figures, you do see, again, a bit more of a pickup in some of the important areas. You saw a lift in the likes of business investment and infrastructure spending. You've seen, again, better export numbers in some areas. So looking at those, I think it's hard to sort of ignore them and say, well, look, let's throw up our hands and say we've got no idea what's happening with the economy. Yes, there's a bit of volatility. Yes, it's a little bit all over the place. But looking below the headline figures and that sort of jumpiness, you do start to see a little bit more activity. And the thing that I guess was pleasing to see in the figures is that there was a bit more broadness to the economic recovery in that September quarter. You saw, I think, 14 of the 16 industries that Stats NZ measures, all of those 14 increased, only 2 of them then declined. So it wasn't that you had 3 that were boosting away and the rest that were middling. You had sort of 14 that were doing a little bit more than average. And so that level of, restart is helpful as we head into the year ahead. But again, you look at the likes of New Zealand with that sort of 1% down, 1.1% up, compared to our Australian cousins who sort of had, 0.6, then 0.4% growth. They're a little bit more consistent. And again, that's just helped their momentum get going a bit quicker.
Yeah, right. So what sectors exactly sort of continue to struggle? If, obviously manufacturing performed pretty well, where are we struggling still?
You've seen a few areas that have still not performing quite as strongly. The biggest decline in the September quarter was in the information, media and technology sort of area. And I think that's sort of just a combination of, again, at the moment, everyone's a little bit sort of cautious about how much money is going into some of those other sort of sectors of the economy. But even the likes of manufacturing and construction, they did see a bit of a boost in the September quarter. They're still not running great compared to where they could have been, say, 2 years ago. But again, that little bit of momentum is starting to show through. And I think you look at the likes of construction, there was a lift in particular that infrastructure area, which I think has been an area that we expected to get going. The likes of residential and non-residential construction, a bit of a boost for some of those parts in the short term, but again, not running at sort of the highs that they were 3 years ago. And that's, I guess, the challenge, right? When we've looked at the figures for the September quarter, they were better than June, which was a bit affected by the Trump tariff announcements. They were better than the September 2024 quarter, but that was also influenced, of course, by the energy price shocks that New Zealand saw at that time. All of this is highlighting that we haven't, as an economy, yet found what the new economic normal looks like. What's the Goldilocks zone? Because we really don't have a good reference point. And so it's a bit tough to say with the economy. It's better than last year, but you'd hope so at this point. It's not as good as when, inflation was running gangbusters, but I don't really want to go back to that point either. And so the feeling for 2026 is you want the momentum to tick up to enough of a pace that jobs start to get going, that investment keeps moving, but not so much that you then start to overheat the economy, because we've already seen those thoughts around interest rates needing to rise. So there's a little bit of tempering all of that. You want better economic growth. You don't want it to become a runaway train.
Yeah, absolutely. We don't want it to become a runaway train. Brad Olsen, thank you very much for joining us on many occasions this year. Merry Christmas, and we always appreciate your analysis.